In this video, we are going to discuss the activities of Chapter 1 from Paper 2 of Foundation. The book name is Fundamentals of Financial and Cost Accounting. So the chapter name is Accounting Fundamentals. This is the chapter Accounting Fundamentals. We are going to discuss the activities. First, let's do the MCQs. First, the revenue and expenses of a company are displayed in which statement? Income statement. The main purpose of financial accounting is to provide financial information to shareholders. Accounting provides information on financial conditions of an institution. The determination of expenses for an accounting period is based on the concept of periodicity. Accounting does not record non-financial transaction because of money measurement concept. Provision for bad debt is made as per conservatism convention. Fixed asset and current assets are categorized as per concept of going concern. Omission of base and showing the round figures in financial statements is based on materiality concept. PL account is prepared for period of 1 year by following accounting period concept. An expenditure is capital in nature when it increases the quantity of fixed assets for the purchase of fixed assets. Capital expenditures are recorded in the balance sheet. Which of the following transaction is of capital nature? Purchase of a truck. 5,000 incurred for upgradation of computer by installation of 128 MB RAM is capital expenditure. Entrance fee of rupees 20,000 received by a club is capital receipts. Life membership fees received by a club is a capital receipt. Cost of goods purchased for resale is an example of revenue expenditure. Import duty of raw material purchased is revenue expenditure. Receipt from Solomon and Company, an invoice for 1,500 for repairs to factory walls is revenue expenditure. Compensation received from a government for compulsory acquisition of land is none of this. All revenues, receipts and expenditures are shown in trading profit and loss account. A bad debt recovered during the year will be revenue receipt. Insurance claim received on account of machinery damaged completely by fire is capital receipt. Amount of 5,000 spent as lawyers' fees to defend a suit claiming that the firm's factory site belonged to the plaintiff's land, ISC. Revenue expenditure. Money spent 10,000 as traveling expenses of the directors on trips abroad for purchase of capital assets is capital expenditure. Nominal account represents both A and B. It means profit and gain and loss and expenses. SBI account is artificial personal account. The process of recording business transaction in a book of original entry is known as journal. Prepaid rent is representative personal account. In an account, if debit is greater than credit side, the balance is known as debit balance. A sale of goods to Ram for cash should be debited to cash. A withdrawal of cash from business by the proprietor should be credited to cash account. Rent account is nominal account. Ledger contains various accounts in it. The process of transfer of entries from day book to ledger is called ledger posting. The rent paid to landlord is credited to cash account. Which financial statement represents the accounting equation assets equals to liability plus owner's equity is balance sheet. The debts written off as bad, if recovered subsequently, are credited to bad debts recovered account. A trial balance will not balance if rupees 500 cash payment to creditors is debited to creditors for rupees 50 and credited to cash as 500. The trial balance shows only arithmetical accuracy of accounts. The process of recording business transaction in a book of original entry is known as journal. Ledger contains various accounts in it. The process of transfer of entries from day book to ledger is called ledger posting. A ledger is also called book of final entry. Whenever errors are noticed in the accounting records, they should be rectified without waiting the accounting year to end. Sales of sham of rupees 500 not recorded in the books would affect sales account and shams account. Errors of carry forward from one year to another affects both A and B, it means personal account and real account. Goods worth rupees 272 returned by Lala passed through the books as rupees 722. The rectification entry is Lala will be debited by 450. If a receipt of rupees 200 from Rajesh, a debtor, has not been recorded in the books, the profit would show neither an increase nor a decrease. A credit purchase of rupees 950 from Sudhir was recorded in purchase book as rupees 590. The rectification entry is purchase account will be debited by 360. Which of these errors affect only one account? All of three. If goods worth 1,570 returned to supplier is wrongly entered in sales returns book as 1,570, then gross profit will decrease by 3,320. Which one of the following is one-sided error? Rupees 500 being expense on travelling expense in the books of accounts at all credited to travelling expense. Which of the following errors affects the agreement of a trial balance mistake in balancing an account? Which of these errors affect only one account? All of three. Which of these errors affect two or more accounts? All of three. Which of the following error is an error of principle? Rupees 5,000 incurred on installation of new plant debited to travelling expenses account. Rupees 200 paid as wages for erecting a machine should be debited to machine account. Bank reconciliation statement compares a bank statement with bank book. On the bank statement, cash deposited by the company is known as credit. In bank book, the favorable balance indicates debit balance. In bank book, bank charges rupees 5,000 was not recorded. Name the correct bank book adjustment. It will be credited to bank book. A bank reconciliation statement is prepared by accountant of the business. When preparing a bank reconciliation statement, if you start with the debit balance as per cash book, checks sent to bank but not collected should be deducted. Balance as per adjusted cash book rupees 274. Checks not yet presented rupees 730. Check deposited not yet recorded by 477. Check deposited not yet recorded by bank rupees 477. Balance as per passbook will be rupees 527. A debit balance in the depositor's cash book will be shown as a credit balance on the bank statement. Which of these types of errors are not deducted during bank reconciliation? Cash embezzlement by the cashier. Which of these documents is not required for bank reconciliation? Trial balance. From the following details, ascertain the adjustment bank balance as per cash book. Overdraft as per cash book rupees 80,000. Checks received and entered twice in the cash book rupees 5,000. Credit side of bank column cast short by rupees 500. Bank charges amounting to rupees 200 entered twice. Check issued the dishonored rupees 2,000. D 82,300. Which of these items are taken into consideration for preparation of adjusted cash book? Mistake in cash book. Which overdraft as per cash book is the starting point? A check of rupees 500 deposit into bank but not recorded in cash book will be deducted by 500. Bank has directly paid 1,250 for rent as per standing instructions. In BRS, starting with passbook overdraft 1250 will be deducted from the passbook overdraft. When credit balance as per passbook is the starting point, bank charges are added. The bank reconciliation statement is prepared to bring out the reasons for the difference between the balance as per cash book and the balance as per bank statement. Benefits of preparing bank reconciliation statements include all of three. Debit balance as per bank passbook mean bank overdraft. Debit side of bank passbook corresponds to credit side of cash book. Difference in bank balance as per passbook and cash book may rise on account of all A and B. Trial balance is used to check the accuracy of income statement balance. When is trial balance normally prepared? At the end of an accounting period. Which of the following account with normal balance is shown at the debit side of trial balance? Cash account. In trial balance, which accounts with normal balance is recorded at the credit side? Accrued expense account. A trial balance shows up on both the equal sides of the credit and debit column. This means that though the arithmetic is correct. Depreciation refers to the process of allocation of cost of the assets over the period of its life. In case the depreciable assets are revalued, the provision for depreciation is based on the revalued amount over the estimate of the remaining useful life of such asset. Which of the following is internal causes for depreciation, both A and B? Which are the methods of depreciation prescribed by the Income Tax Act? It is equal installation and written down value method. Depreciation is not provided for which of the assets, both B and C? Obsolescence means decline in the value due to innovation and invention. The depreciation account is closed at the end of the year by transfer to profit and loss account. Which of the following is an external cause for depreciation? Obsolescence. Accumulated depreciation is an example of a liability. Purchase price of a machine is 8,90,000. Freight and cartage rupees 7,000. Installation charges rupees 30,000. Insurance charges rupees 20,000. Residual value is rupees 40,000. Estimated useful life 5 years. Calculate the amount of annual depreciation under straight line method is 1,77,400. Depreciation of a 10-year lease is best done on the method SLM. Original cost is 1,50,000. Residual value is 10,000. Depreciation for third year at the rate 10% per annum under WDV method is 12,150. For charging depreciation on which of the following assets, the depletion method is adopted. Wasting assets like mines and quarries. The value of an asset after deducting depreciation from the historical cost is known as book value. If the original cost of machine 1 lakh, life 5 years, residual value 2,000. If the depreciation for 4th year as per SLM is 19,600, then the rate of depreciation per annum is 20%. To write off bad debt, following entry is past bad debts, debit, debtors, credit. A recovery of bad debt increases net income. Provision for discount allowed on outstanding debtors balances should be calculated at an appropriate rate on total debtors net of any bad debts written off and after deducting the cumulative account of any provision of doubtful debts. Bad debts are recorded on which accounting principle prudence. Provisions are internal transaction. Original cost 12,60,000, salvage value nil, useful life 6 years, depreciation for the first year under sum of years digits method will be 3,60,000. The numbers of production of similar units expected to be obtained from the use of an assets of an enterprise is called useful life. If a concern proposes to discontinue its business from March 2023 and decides to dispute of all its plants within a period of 4 months, the balance sheet as on March 13, 2023 should be indicate the plants at their net realizable value. In the case of a downward revaluation of a plant which is for the first time revalued, the account to be debited is profit and loss account. The portion of the acquisition cost of the tangible assets yet to be allocated is known as written down value. Original cost of a machine was 25,20,000, salvage value was 1,20,000, useful life was 6 years, annual depreciation under SLM method is 4 lakh. The cost of machine is 20 lakhs, 2 years later the book value is 10 lakh. The straight line percentage depreciation is 25%. And machinery with original cost of 10 lakh and nil salvage value acquired on 1st April 2019 with 4 years useful life was depreciated using SLM. It was decided to sell the machinery on 1st October 2022 for 1,20,000. What shall be the gain or loss on the sale of machinery? Loss of 5,000. Which of the following assets does not depreciate? Land. A company purchased a machinery on April 1, 2017 for 15 lakhs. It is estimated that the machinery will have a useful life of 5 years, after which it will have no salvage value. The depreciation charged during the year 2021 to 22 was 3 lakhs. In the next video, we are going to discuss the true or false activities from this chapter 1. So, the chapter 1, all MCQs from fundamentals of financial and cost accounting is done. If you like the video, then subscribe for the next videos.